Today I'm going to be talking about investment values and telling you why it is so important that you understand what gives your investment value before you start investing. Hello everyone, my name is Rooshock and today I'm going to be telling you all about investment values and why you need to be able to determine what gives your underlying investment value before you actually go and put your dollars down. So I'll go through 4 different areas. So I'm going to talk about shares, crypto, NFTs, and property. So I'll go through each of these, talk about how you can determine what gives it value, how you can determine then whether it might be a good investment for you, whether it meets your risk profile, etc. And then why that is so important to know before you start investing. I'll start with shares or stocks, however you may know them, and they're probably the easiest to understand because you're investing in companies. Now, whether that is through an ETF or whether it's through a listed investment company or whether it's through an individual company, you're investing in those companies. So obviously, what's going to give them value is what gives that company value. Now, the way a share is valued is that it is based on what the market value is at the time of those shares. Now, this is based on a collective group of people going, well, this is where I think this company is going, or this is where I think it currently is at. And that gives it the value, what everyone's agreeing that it's worth. So shares could be undervalued in your opinion or overvalued in your opinion because you may not agree with what the broad market believes. And the reasons for this might be that you think, okay, that company has a lot of future growth, so therefore I think profits will increase and therefore making it more valuable. It might be paying out dividends, so dividends might increase, for instance, or just in general, the company is getting bigger and it's getting stronger and therefore I believe the underlying share value will increase. Or you might believe the opposite. You might believe the market has priced too much of that in and you think that company is going to decline. Therefore, you might believe it is overvalued. So you can see a lot of what makes up a share or a stock's value and the share price is going to be based on that company's current financial position or expectations of its future financial position. And that will all go into that share price. And again, you're looking at things like revenue. You're looking at things like profit. That's what's going to make up people's expectations around it. And therefore, that's going to be what gives it value. So from an investor's point of view, you're then looking at that share price and you're going to go, well, is it undervalued, overvalued? What do I think the company will do in the future? And then you'll make your decision on whether it is a good investment for you or not. Now, crypto is much harder because unlike shares and stocks, we don't have a company's financial statements to look at to determine is it a good investment or not. A lot of it is into the belief in a project or understanding its use case and seeing where that could go in the future. So it's a lot more of a speculation because you haven't got that data to go off or those analysts that have been studying this for 50 years. It's a lot newer of a product and therefore a lot riskier because we haven't got that history to go off. So what a lot of people are going off is either gut feeling or being early adapters and going, I can see that use case and I can see that growing and therefore I can see that providing more value, therefore making it more valuable. Crypto is so different because each project and each coin is so different in its mannerisms or how it's being used. So a couple examples are, say, Bitcoin, which people seem to be using a little bit like a store of wealth or hedging against fiat currency. So they're putting money into Bitcoin and they're hoping that it will go up in value over time because of the limited supply that it has, because of more people coming to the crypto sphere. So that's what's giving it value, is that people have determined, well, this is the first one, this is the one we trust, therefore we'll put our money into it. Therefore that value is a little bit stronger there. We then have projects like Ethereum that is actually being used. So a lot of projects are being built on the Ethereum network and therefore that's giving the underlying token value. Or people are transacting with Ethereum. So they may be buying NFTs with Ethereum. So again, you've got a use case here where it's actually being used. So that is what's giving it value. So as an investor, you're going, well, I can actually see why it's being used, how it's being used. And if you believe that it's going to be used more in the future and it's going to keep growing, then you might choose to invest in that. Now, there are a lot of smaller projects like that that have got some kind of use case or are promising a future use case. So a lot of people are investing based on what they believe the project could be used for in the future. But in crypto, there's also a lot of coins out there that have no use case. They're meme coins, for instance. And they don't really have a use case, but people have just invested in them. And because so many people have put money into them, they've grown in value. And it could be from a tweet from an influencer or something like that that boosts its value. So they're definitely things I would typically stick away from or have a real understanding that you probably are more so gambling rather than investing, and it is incredibly risky. The chances are with this, by the time it reaches mainstream media, you're probably too late. There's already people that hold bags to this that are probably going to dump them as soon as that value goes up. So definitely approach with caution. Now, another area you should approach with caution, but it definitely is an investment people are looking at, is NFTs. And these are even newer than crypto. So there's even less to go off and go, well, that's what determines its value. And when you see some of these values and what they're selling for, it's really hard to justify why they're worth that type of money. So with NFTs, I kind of break it down into two different ways. We've got things that don't have any kind of utility or access. So they may be art pieces or their profile picture projects and things like that. And they're getting their value from either a community that's around that wants to support it or support that artist or wants to use it as a bit of social proof. Oh, look, I own this CryptoPunk, for instance. And that's what's giving it value. Now, some of these values are crazy, and I do believe a lot of these projects may be overvalued, but there may be some OG projects that do well in this. So it's a really hard area to really grasp what is actually giving it value and how to determine if that's over or undervalued. Now, we do have other projects out there that have an access part of it or a utility part that maybe makes up some of that. So some of it may be tied to that community or it being the first of a project, for instance, but the other side of its value may come from what it actually gives to its token holders. And I've used the example a lot of the times of VFriend. So this gives access to VCon. It gives access to one-on-one things with Gary V. And this is what's giving it value. Or they've got the gift goats where people are receiving a gift, whether it's in the form of an NFT or something physical. And again, this is giving it future values. So I think that's definitely an interesting use case of where maybe an NFT has part investment value, part usage value, and that may make up its combined value. Now, speaking of NFTs, if you haven't seen, I'm going to be launching my own NFT project, Rooshock. I'd love for you to go and check it out. I've got the Discord link in the description below. I'll link you up to the video that I've done talking about the project as well. I'm really excited to launch this, and I'd love for people just to check it out because I really want to show people how a small business or a personal brand can utilize NFTs in a way that not only provides value to them, but provides value to the token holders and to their community. The other thing that could give an NFT value, and it may not happen yet because I think there's a lot of legal loopholes here to sort out, but royalty. So you may invest in an early stage artist, a musician, and you may buy their first album, and that may give you ongoing royalties as that album sells or as it's streamed on Spotify. So if we get to the stage where NFTs do things like that, the NFT could provide you a royalty for the rest of your life. So that may be where the investment is. So I think a lot of NFTs, if you think about, you're typically backing people. I think the projects that have got a person to its face, and that's what people are backing. I think you're investing in people and their ability to grow a project rather than necessarily some of these anonymous projects where I'm not sure about those. And then the last one I wanted to talk about was property. So property is probably a easier one to understand where it gets its value from because you're getting the value from the property. People like property because it's a physical thing they own, and therefore they go, I own that, therefore I know that that is worth something. Now, property kind of gets its value from two things. So some people will be looking at a positively geared property. So they're looking at something that's going to return them rental income that's going to outweigh the expenses, and therefore they're going to get an immediate or an ongoing return on their investment. So they may work out they're going to make $3,000 or $4,000 or $5,000 a year based on the money they've put down, and they know that's what the return is. That's what's going to give it value. Now, the other side of property though is capital growth, and this is probably where people make more larger sums of money, is they're hoping the value of the property goes up. So they're investing in areas, so it might be in a capital city that they believe that the property prices are undervalued or they're going to go up in the future. They're investing in that, and that is where they believe they're going to get the growth from, and therefore that's what's giving that property value. So when you're investing in property, you're looking at, well, is it going to return me a positive income each year, or am I looking at capital growth? So they're the kind of two areas people are looking at to determine, well, what gives that property value? Do I believe it is over or undervalued, and therefore is it a good investment? So as you can see, by having an understanding of what gives your underlying asset value, it is much easier for you to determine, well, is that a good or bad investment, or at least have an idea that you've made a thorough investigation before putting your money down. So I'd really want you, every time you invest in something, especially if it's something risky like crypto or NFTs, to have an understanding what is going to give that value. Because if you can't tell me what gives it value, then I don't think you should be investing in it. Hope that video has been helpful. As I said, go and check out the Rooshock's Discord. I'm also answering a whole bunch of tax questions in there. So, hey, free tax advice. Who wouldn't say yes to that? I appreciate you watching the video, and I'll talk to you again soon.